is title insurance for, and is it worth it? I'm Sandy Warner with Warner Realty Group, and today we're going to talk with Adam Thayer of Sayer, Regan and Thayer. And somehow I recorded him, but not me. So you'll hear my voice, but it's going to be all Adam all the time on this video. But I think you're going to find it really interesting. Adam's going to talk about the different types of ownership and how title insurance has saved people time, money, and aggravation, and really prevented some catastrophic failures with some real life examples. So come on, let's go have a chat with Adam. I hope you find this interesting. Please subscribe to my channel below. Click the bell if you want to get notified when we put new videos out there. And let me know what you think. Hey everybody, welcome back to Warner Realty Group's Talks with Adam Thayer. Today we're going to talk about title insurance. What is title insurance? Why do you need it? And this will relate specifically to buyers. So please join me in welcoming Adam Thayer of Sayer, Regan and Thayer. Good morning, Adam. How are you?
Great. Thank you for having me. How are you?
Always a pleasure. Always a pleasure. Today it's raining. We're filming this in the winter, and the rain just turned to snow. I don't know if you have an outside window, so it's kind of pretty, actually.
Oh God, hold on, take a look.
Yeah.
Yeah, not too bad. Not too bad. All right, we'll get on early today. Good.
So what we wanted to talk about today, and this is part of our series to help agents and buyers and sellers, let's talk about title insurance. I think that's one of those things that may sneak up on buyers and they don't really understand it until it shows up on their CD. So why don't we start with, what is title insurance? What is it insuring, actually?
Okay. Yeah, Sandy, happy to help. So one of the first questions I always get is kind of the distinction between this and homeowners insurance.
Yeah.
Because people will see that and they'll go, wait a minute, I'm already getting homeowners insurance through whatever, Amica or, some random company. And so it's a totally different thing. So the homeowners insurance, or as you'll see it disclosed on a lot of closing documents, hazard insurance, is protecting the physical dwelling. If someone slips and falls, there's a fire, stuff like that. Title insurance,
also called hazard insurance.
Yeah, exactly. Hazard, homeowners insurance, something like that, liability, that kind of whole umbrella stuff. The title insurance is really protecting your title to the property and kind of as it relates to that. So one of the main—
What is your title? What, maybe even back up what is your actual title?
Well, okay. So if you go to law, when you're in law school, they use a lot of the, the Latin stuff like fee simple absolute, which, no one ever talks like that in real life. Yeah. But basically it's, in broad brushes, do you own the home? And so do you own the real estate? There are shades of, not necessarily gray, but like little slivers you can slice off of that. In law school, they always talk about the bundle of sticks as title, and you can give people one of your sticks.
I forgot about that.
Right. And so you can give somebody, to give somebody a stick would be to basically say, I'll give you an easement over the property. So you're giving them a stick of your bundle of sticks of your title. Or something like that, or you could give a restriction on the property. Hey, I agree, I'll only do a crushed shell driveway in this neighborhood. All right, well, you've agreed to a restriction or a covenant on the property, which again is a stick from your bundle. So whatever title you have, whether it's, fee simple absolute, which is the law school speak for you fully own the property, or whatever it is, it's gonna be a property that's subject to an easement or whatever title it is, we want to make sure that we're insuring it, because for most people, this is the largest investment of their life, or the largest investment at that point in their life. Hugely important to them, whether it's anything from a single family dwelling to a commercial closing on a business property. And so the first real step in that whole process is doing a title search. It kind of depends on where you're at. In places like Connecticut and Rhode Island, that's done at the municipal level. So if you buy a property in Providence, Rhode Island, title is held, or title is indexed at City Hall at Providence. So that's where the land evidence records are at the municipal level. Other places like Massachusetts, it's at the county level. So if you buy a place in Swansea, Mass, it's done at Fall River, the Fall River Registry of Deeds. And basically all of these places now, up until very recently, some of them were not online, places that are very quaint, like Little Compton was not online. But now, their self-driving vehicles are getting on the roads. So I think it's, time that we get land evidence records fully online. So that transition has kind of happened. So
and it's all public record. Yeah.
Yeah, it honestly, it is public record and it's a public service. And in our general area, there's kind of two different companies that service these towns. And so once you're familiar with those two systems, it's fairly easy to search these land evidence records, and you can do it either by date, by name, whatever. So the very first step in that process is ordering a title search. And then that comes back and we can kind of see what we have on title and kind of go from there.
When does that happen? So if you're you have a buyer and you write a contract and your offer is accepted. When does title get ordered? Is that something the buyer has to go do, or what does that process look like?
Well, so if it's a cash deal, again, cash deal.
Yeah.
Basically, a deal with no lender that's taking a lien on the property. So we're not recording a mortgage. Then there's no real what we call a title order that comes through the attorney's office. We just basically go and order the title through the title insurance companies. And like, for example, I have a client who does a lot of commercial transactions. And so to save him money, what I usually do, and I had this conversation with him last night on a bunch of deals, was let me know when you're through all your due diligence periods and all your other contingencies, financing contingency, due diligence, whatever it is. I don't want to incur those expenses to him prior to him knowing that he's definitely going to buy this property. On the flip side, most of our residential deals, people are getting a mortgage. So what happens is the lender in that deal, Bank of America, Movement Mortgage, whoever it is, will send my office what's called a title order. And that is almost like a little outline of what they want. Hey, Adam, here's the property, how much we're going to lend, how we're planning on showing the borrowers on title. For example, is it going to be John Q. Doe or just John Doe? And then any sort of other requirements they're going to have for how they want to be listed on the title insurance policies and stuff like that. Once we get that, we submit it to the title insurance company / title examiner, and they kind of run with it from there.
So the way that happens, if you happen to be watching this and you are purchasing property, once you go under contract, you're in Rhode Island, your agent is probably going to send you a list of attorneys that they work with, or maybe a friend of yours referred you to an attorney. You're going to hire your attorney. The buyer's attorney generally in Rhode Island conducts the closing ceremony. So once you connect with an attorney, your agent sends them the purchase and sales. That's how your attorney knows whether it's a cash deal or a finance deal. And then that sort of happens very quietly. Not quietly, I don't want to say that. It makes it sound like it's secretive. It's not that you have to say, hey, attorney, go order title for me. The attorney knows that's why you're hiring them, is basically where I was getting with that.
So, and saying that's a good point. There are other places like on the West Coast where that's not the case,
right?
Where there's an attorney role, and then they have these like what are called title companies, which are different from title insurance companies, but they're basically non-attorneys and non-law firms that just search title. Those roles of acting as the lawyer and acting as someone searching title gets broken, split apart into two different entities in other states. That's not the way we do it in our neck of the woods. In the Northeast, the law firm that's conducting the closing, 99% of the time, is also the one that is searching the title, assisting with the issuance of the title insurance policies and all kind of stuff like that.
And that does sometimes get confusing, particularly because we do have a fairly large military presence. We have people coming in from out of state, and they want to use their attorney in Colorado or wherever, New York. And so sometimes there's just a little bit of education, like here's how it's done here, and this is much smoother if we just do it this way. Absolutely. So I think that's important. Why is it important that we do title insurance and we check title? When we're checking title, what are we checking?
It's a great question. So, when I talk about this to people, I usually tell them that there are 3 buckets, broad brush, of title issues that can come up. And so, to back up a little bit, people say, hey, I paid the lawyer to search the title. There's a problem. Why wouldn't I just be able to file a malpractice case against you? Listen, it's certainly possible. People make mistakes. I'm not perfect. Everybody makes mistakes. So if I made a mistake, we'll own it. But there's an almost limitless number of things that could be wrong with title that would not necessarily be revealed by a title search, or could be, a latent title defect. And so that's why there's title. And so well before my time, what lawyers used to do is they would collect a fee from a client, certify title, and then they would self-insure. And if there was ever a problem, they would just handle it and pay out the damages. But, the last 30, 40 years, home prices have just exploded relative to, the consumer price index, income, stuff like that. So it no longer became feasible for law firms to do that, hence the rise of title insurance companies. One of the big ones locally is CATIC, which stands for Connecticut Attorneys Title Insurance Company, right? And so the whole point of that was just like any other insurance, health insurance, automobile insurance, whatever. We all pool our resources. That way, if somebody has an issue, it's not financially devastating because we've all kind of pooled our resources into one pot. An attorney could charge every client $500 in certified title. But if they have a couple closings where there's a major problem on title and they have $2 or $3 million in property or one big deal, that's it. That bankrupts the firm. So that's exactly why you can't have that. And even then, the issue could be through no fault of the attorney. So to give you some examples of the three buckets when I talk to people, very mundane title claims that happen literally all the time. I mean, multiple times a month in my office, just due to the volume that we're doing, would be, let's say, Sandy, you buy a property, you then go to sell it. And we discovered that you had a mortgage to Hospital Trust Bank from 1988, 1990, something like this, a bank that no longer exists. And you have a tight deadline to sell this house. We now got to track down that, again, it's a hospital trust. I think that they were bought by Fleet, which was then bought by Bank of America. So we've now got to find somebody at Bank of America who can appreciate the nuance of what we're talking about to get a discharge for your mortgage from 1990. I mean, that's not going to, you're sending messages into the abyss and hoping that someone gets back to you. I mean, this is not going to be a short order issue here.
Right.
So that can have a major impact on your closing. Now, if there's title insurance involved in this process, what we usually will do is we'll just go, hey, Fidelity or CATIC, whoever insured the title, Sandy's selling it, Adam's the buyer, and Adam is going to get his law firm is insuring the property through Fidelity. Sandy, who did you get your title insurance through? Oh, it was through Fidelity. All right, great, no problem. Because guess what? Fidelity already has a current title insurance policy. They're issuing the new one. They're already on the hook for this title. They won't even care. They're just going to, we call right over that issue. They will figure it out and they'll track down that discharge on their own. And if it's something that technically was a little bit outside of their scope, there's some very nominal fee. It's like $200 to have them track something. If it's, let's say you wrote through with Fidelity and the buyer is getting a title insurance policy through somebody else like CATIC or Stewart or one of these other companies, Fidelity will issue a letter of indemnification. It says, hey, buyer's title insurance company, we agree we're on the hook for this old discharge to Hospital Trust. You can close. We will cover you if anything bad happens. But in the meantime, we're going to track down that discharge. Okay, so that's
the first one is it's helping you. It makes it easier for you when you go to sell that property.
100%.
Particularly the way banks, particularly in the 80s and the 90s and the early 2000s, where banks were merging and going out of business, and now they're bars, and half the banks in Rhode Island are now beautiful restaurants. So
or
that's
refinancing. Anything that's going to happen, even refinancing, or you're going to take a line of credit or home equity loan, and there's something on title that then comes up.
Yep.
Either was not properly discharged,
which happened a lot.
Right. Bank A signed for Bank B under power of attorney, but we can't find the power of attorney.
Yeah.
Ticky-tack, stupid. The reason people hate lawyers type stuff, like ticky-tackness of this. But you can get an indemnification. The title insurance company agrees. Hey, we're on the hook. Don't worry about it.
So it allows you to move forward with your subsequent transaction quite easily for a fairly nominal fee. And it doesn't seem like a big deal, or it doesn't seem like that might be something you'd want to insure. But if you ever got caught on the other end of that and you lost a buyer because you couldn't provide clean title, you'd see really quick how problematic that could be.
Or your refinance gets delayed and then you lose your rate lock and then rates go up. And now that, you know what I mean? So from 90+% of the time when you have a minor title issue like that, the title insurance company it's completely covered. They just handle it. You don't even worry about it. And we close almost immediately. Yeah. So that's the more ho-hum, mundane, run-of-the-mill title issue that we deal with. Ones that are more in the middle, they're not, in the absence of title insurance, they wouldn't be financially catastrophic for most people, but they would be, you'd be telling you'd be commiserating over it over a beer, because they would be have a major financial impact. And so a great example of one that I had was in Rhode Island, we have the non-resident capital gains withholding. We call it the 71.3.
Yeah.
Where if a non-Rhode Island resident sells real estate, the state puts a lien on the property for capital gains taxes, which we'll probably discuss in another video. But in essence, you have to do a tax withholding for a non-resident seller in Rhode Island. And then a document gets recorded with the town that discharges any lien. I had a client who bought a property from a non-resident seller. Like 10 years later, she went to go sell it. The problem that we had was the discharge of the non-resident tax lien from when my seller bought was never recorded. And it was like $30,000 that was supposed to have been withheld. So we tried to track down, I got the old settlement statement from when my lady bought, and we tried to track down the lawyer who did the old closing. He was retired, had dropped off the face of the planet. We could not find this guy. But my lady needed to sell this property. She was in dire financial straits. The buyer's attorney basically said, well, Adam, we can't close. There's, in essence, a $30,000 lien on this property.
Right.
We called up her title insurance company. They wrote a check for 30 grand that day. We gave it to the Rhode Island Division of Taxation. They held it in escrow, pending sorting it out with finding. I think that the lawyer's son ended up becoming a lawyer. They're going to try to figure it out with him. That got us closed. I honestly have no idea how that resolved because we don't care. It wasn't one of my lady's problem. She had the title insurance. They put up the 30 grand. She closed, no problem.
Yeah. So think about that. If you were selling your property and you don't know this happens until your buyer goes and does their title search, right? So if you're a seller in Rhode Island, you're not doing a title search. Your buyer is doing it. So all of this is happening out of your vision. You don't know any of this is happening because you don't buy and sell property every day. So it doesn't occur to you. And you get a phone call from your agent saying, we can't close because there's an outstanding lien, which wasn't even your expense to begin with. Rhode Island makes it your expense so that, you know, when you're the seller who doesn't live in Rhode Island moves to Florida, Rhode Island still gets their sales tax. So just the peace of mind of knowing that that wasn't your problem is invaluable. The headache, if you need to sell a property, when you need to sell a property, you need that money. You need it immediately. You've got medical emergencies. You've got to move and go take care of somebody. You've got a job somewhere. You have to go. So that's a great scenario that your title company resolves the problem for you.
And in that example, Sandy, that lawyer made a mistake. So that was malpractice. To some level of mistake was made, whether it's just an innocent mistake or something nefarious. And so you might just say, hey, well, why don't I just file a malpractice case against this lawyer? Okay, but those things don't get resolved instantaneously.
Yeah, that's a year or more.
Instantaneously. That property closed the next day.
Yep.
That's kind of medium bucket. Okay. So we had the initial ones that are like, hey, more ticky tack, ho hum. We need to get these discharges, whatever. Then we get these middle ones. Yeah. Toy clerical stuff. And then we get the middle ones where it's kind of, oh, there's a tax lien or something like that, or a mistake in a recording or something like that. Okay. Then we have the real deals. I mean, these are the stories you tell, at your retirement party. Okay. And I had one happen. One of the last closings I ever did, normal, like in before COVID, where everybody was around a table, realtors and everybody. I had a client who was buying a property. He was a house flipper. So it's kind of important for the story because he was not expecting to hold on to this property long term. He needed to get in and out of the property relatively quickly. The property was owned by a grandmother and her two granddaughters.
Yeah.
Grandma was elderly, so she was in a nursing home. So she pre-signed power of attorney, pre-signed the deed, signed a disbursement authorization for how to split up the money and some tax forms. The granddaughters then brought those to closing. They had a real estate lawyer. I was representing the buyer. We all got together. We signed everything. Maybe like a month later, I get a call from another lawyer. Oh, I did not know who she was. And she said, I am the estate planning lawyer for the grandmother. Did you get her signature on a deed? I said, yeah, it was given to me by the granddaughters and their lawyer. She said, well, grandma has severe dementia. She doesn't even know what day it is. How did somebody notarize her signature? Obviously, that's a major problem. The long story short of it was the aunt was the real power of attorney for grandma. These granddaughters had tricked the family. They went to the nursing home with a friend of theirs who was a notary and got the grandmother to sign the deed and a power of attorney.
Oh my God.
The family had no idea they were doing this. So we had no idea. Their real estate lawyer had no idea. because he wasn't their normal estate planning lawyer. And so my guy bought it. We paid off their mortgage. And so this became a major problem for grandma's estate plan due to a number of reasons. But basically, she was going to get kicked out of the nursing home.
Sure. Medicare lookbacks. Yep. It was
exactly, because it turned into, in essence, being deemed a gift to the granddaughters, because the granddaughters, shocker, walked away with all the proceeds. So this estate planning lawyer said, I don't know what to do. I think I have to sue to undo the sale to get the property back and claim fraud.
Oh my God.
Okay. I had to call my guy and tell him, listen, that deed was signed by somebody without legal capacity to sign a deed. It's an invalid deed. We need to now file a title insurance claim. I mean, it was unbelievable. And my guy said, Adam, I need to get in and out of this property. I'm carrying this property. I'm not like looking to rent it. I'm looking to sell it, put it on the market next week. It became a huge problem. The state police ended up getting involved. And the long story short was, when something like that happens, my client, in essence, had limitless legal resources.
Yeah.
He had paid for the owner's title insurance premium, which didn't really mention this, but it's not an annual premium like homeowners insurance is. You pay it at the closing and that's it. It covers you. Okay. So the title insurance company, I noticed they have a stable of litigators who are just ready to go. Hey, you're going to challenge this closing. We will sue you. And by the way, our client doesn't pay legal fees. So we can litigate this to the ends of the earth.
Yeah.
Meanwhile, this family, which I felt bad for, but like it wasn't our problem.
Were the granddaughters actually related? Were they actual granddaughters?
Oh yeah, yeah. So their mother had predeceased. So their aunt was grandmother's daughter, other daughter, was the power of attorney and said, you cannot sell this property. It will impact her estate plan and her ability to get government benefits to stay in the nursing home. But the granddaughters were listed. Sandy, as you're probably familiar with this, they were like remaindermen on the deed. Yeah. Grandma had a life estate. The granddaughters had a remainder interest. The granddaughters were sick of waiting for grandma to die, basically.
Oh my God.
So they sold the property and took all the money. I mean, it wasn't a ton of money. It was like $30,000, $40,000 that was left over. They split and just bolted.
Oh my God.
The family was beside themselves.
Sure.
And so the long story short of this is that the grandmother's family just basically dropped it, because they knew there was no way for them to claw that property back, because they couldn't even begin to match the legal resources that my client had. My client could have literally litigated to the ends of the earth. Whereas were they going to come up with 10 grand to just for a retainer for a litigator for this, for a case they were probably going to lose anyway. And then on top of that, the whole public policy argument of third parties should be able to rely on notaries,
Yeah.
So that was an unbelievable law school exam type of situation where my guy probably paid $400, $500 for a title insurance policy. And I think he paid, low hundreds of thousands for that property because it was a little bit distressed. But there you go.
Yeah.
So you are totally good. That deed could have been signed with a crayon and he's fine. So that's really that. I mean, that, if you ask me, like, if that's the real reason that you're wanting to pay for this,
fraud.
But the other two are the ones that are much, much more common, particularly that clerical one is the one that just comes up constantly. But the real reason for you sleeping easy at night is that potentially catastrophic.
And honestly, even the ticky-tack ones, if you cannot close on your property because you can't track back the deed due to banks closing or somebody misfiling, that can be catastrophic for you if you lose your rate lock, if you have to go somewhere. So the point is, title insurance really is worth every penny. We very, very rarely will agree with a buyer that doesn't want to do it. Obviously, it's the buyer's choice, but we're like, no, don't do that. That's crazy. So what does title insurance cost?
Okay,
generally?
So one thing I want to talk about with that is it costs different if you're buying in a non-financed cash deal versus a deal where you're getting a mortgage, because there are in a deal where you're getting a mortgage, there are two title insurance policies: lenders and owners.
Yeah.
Lenders covers the lender up to the loan amount. The owners covers the owner up to the sales price. So in a deal with no mortgage, you just have the owner's policy. These title insurance premiums are regulated by each state. So it depends on the state, and in some states, the location within the state, how much the title premium is going to cost. And then it's also going to depend on the sales price of the property, the loan amount, and then if there's any sort of endorsements, which I can get into later. But so what ends up happening is somebody comes to us and they go, hey, Adam, I'm buying this house, $200,000 sales price, $100,000 mortgage. and it's in Newport, Rhode Island. We literally go on the program that we have on our computers that just goes boom, we type in all the deals and it just literally spits out a premium for the owners and the lenders policies that is, based on the rates that are set by the state, almost like National Grid being regulated like a utility. And so what people will sometimes find counterintuitive is that in a deal with a mortgage, the owner's policy is cheaper than the lender's policy.
Is it like a gap insurance?
Well, so the gap insurance is part of it. The owner's policy, you get a drastic discount. It's called a simultaneous issue. The general idea is that the lender's policy is mandatory. No lender, and I can get into why, but no lender will ever close without a lender's title insurance policy.
Sure. And why would they? Yeah.
Because Sandy, I'm a bank. I gave you a loan to buy a property. Yep. You get a mortgage. We discover that some sort of crazy fraud happened and the deed was invalid. Then the mortgage you signed is invalid. You can't sign a mortgage for a property you never really own.
Right.
Then if you file bankruptcy, boom, I now have a mortgage with no security and no ability to collect on it. The only way I as a lender am protected is if I have a lender's title insurance policy.
Right.
So in a deal like that, you then get an owner's policy as well. Well, the title insurance companies is essentially double insuring the same property. So when someone is getting an owner's policy on a closing where they're getting a mortgage, it's going to be fairly inexpensive. On most mere mortals closings, somewhere in the hundreds of dollars range. I mean, okay. What I usually try to tell people is, again, this is not perfect, but like, what does a year of homeowners insurance cost you? Just budget that is what a title insurance policy is going to cost you. Again, it's far from perfect, but contrary to homeowners,
it's in the ballpark.
It's a one-time fee. So if your home is going to cost you $1,000 for a homeowners insurance policy, just budget that. I mean, you can contact your lawyer or your lender and they can get you a definitive number based on your location, the terms of your deal. But at least that kind of helps you cocktail napkin your
How much do you need to have in the bank? Yeah. And that is a one-time fee that you pay at closing. Yep. So if you're the buyer, it's a check that you have to write.
Yep. Yep. And then, awesome. So one of the other things is that as you get into, let's say you have someone who's buying a mixed use property, or they're buying something that might have a little bit of hair on it. It's slightly out of the ordinary, or they're getting a hard money loan, or they're a flipper, or it actually is a commercial property. Then you start getting what we call endorsements to the policies that are usually required by lenders. And that's additional coverage, whether it warrants that the property is in zoning compliance, or it warrants that there protection against any sort of environmental protection liens, stuff like this. I mean, there's a million of them.
Yeah.
And those are usually some sort of relatively low fee. Some of them are free. Some of them cost, let's say, 50 cents per thousand. But those come up again in the minority of deals, especially if you're skewing towards, hey, I work with a house flipper, somebody who gets a lot of short-term hard money loans, mixed use or commercial properties, just be prepared that those title insurance costs will be a little bit less cookie cutter due to the more customized nature of those policies.
Makes sense. All right. Well, thank you so much, Adam. I know that's a pretty basic topic, but I think people have a lot of questions about that and why they have to. And I think the more you understand how something benefits you, the more you're willing to write that check. Don't ever purchase a property without title insurance. I mean, it is just, unless you're an attorney and you like going and fighting those things, then have a ball. But if you've got a loan on it, you can't buy it without title insurance anyway.
You can't. And so if you're getting a loan, the owner's policy becomes so cheap most of the time that it's like, it would be so unbelievably penny wise and pound foolish to not get it, number one. And then there are some closings, my office will not do them without a title insurance policy. For example, post foreclosures. Yeah, the risk is just so high. If you're buying a property that has been recently foreclosed, the foreclosure process is so complex and so fraught with peril. And when you sign these contracts with these post foreclosure entities that own the property, they disclaim everything. They give you a quick claim deed, not a warranty deed. I mean, it's all on you. And if somebody wants to close without an owner's policy, I politely refer them somewhere else, because that's just not a risk I'm willing to take and get involved in something like that. Yes, it can be a case by case basis, and there are maybe limited instances where maybe you're buying your family's homestead, where that they've, the street is named after your grandfather,
Yeah.
something like
Built
that.
it.
You know what I mean?
Yeah.
You know what I mean? We're like, okay, all right, maybe that's fine. But in the absence of that, in 99% of deals, it is just, it's not worth it. It's a foolish choice to proceed without it.
Yeah. Yeah. All right. Well, if you have any questions for Adam, if you're an agent or you're buying property and you're looking for more details on title insurance, Adam, where can we get in touch with you?
My office is at 130 Bellevue Avenue in Newport, Rhode Island, 401-849-3040.
And we'll have Adam's website up here and his email address for you. This can be a dry topic. I hope those stories made it slightly more interesting, but it's one of those things. Don't take that risk. It's a foolish risk. There's no need for you to do that. I'm Sandy Warner with Warner Realty Group, making the complex simple.